Do I have to do something right now? The psychology of urgency in investment decisions. In financial markets, many investors feel a constant pressure to act. Prices move, news appears, and opportunities seem to disappear quickly. This creates a powerful internal question. Do I need to do something right now? Surprisingly, research in behavioral finance suggests that this feeling of urgency is often psychological rather than rational. 1. The action bias. Humans naturally prefer doing something rather than doing nothing, even when inaction might be the better choice. Psychologists call this tendency action bias. This bias appears in many areas. Investors trading frequently during market volatility. Managers making unnecessary changes to appear active. People reacting quickly to uncertainty. In investing, action bias can lead to excessive trading, emotional decisions, higher transaction costs. Ironically, the urge to act often reduces long-term performance. 2. The illusion of control. Another psychological factor is the illusion of control. When markets fluctuate, doing something, buying, selling, adjusting, creates the feeling of being in control. However, financial markets are influenced by thousands of factors that individual investors cannot control. Taking action may feel productive, but it does not always improve outcomes. 3. The pressure of constant information. Modern investors face a constant stream of data, price updates, breaking news, social media opinions, market alerts. This information overload can create the impression that every moment requires a decision. In reality, long-term investing often rewards patience more than constant activity. 4. When doing nothing is the best decision. Some of the most successful investors emphasize patience. For example, Warren Buffett often highlights the value of inactivity in markets. He once compared investing to a game where participants are not forced to swing at every pitch. In many situations, the best action may be waiting for clearer information, sticking to a long-term plan, avoiding impulsive trades. Inaction is not laziness. It can be a deliberate strategy. 5. A simple decision check. Before acting in financial markets, investors can pause and ask, is this decision part of my strategy? Would waiting change the outcome? Am I acting because I feel pressure to act? If the answer is the last one, the urgency may come from psychology rather than necessity. Final insight. Financial markets often create the illusion that something must always be done. But disciplined investors understand an important principle. Sometimes, the most rational decision is simply to ask, do I actually need to do anything right now?